Hello traders, Gary Wagner here. It is 11:37 in Honolulu, 5:37 in New York on Thursday, 2nd day of June 2022, and this is the Daily Report for gold and silver. An extremely strong day for both gold and silver, with gold gaining 1.27%, silver gaining 1.94%. Gold, basis the most active August contract, is up $23.50 and currently fixed at $1,872.20. It was the dollar that was largely responsible for today's move, as we defined the dollar in terms of strength or weakness, today having extreme weakness, the opposite of yesterday, and the dollar itself gave up about 0.75%, considering that gold moved up about 1.25%. You can see that the additional 0.5% in terms of gains was due to market participants bidding the price of gold higher, and the majority of today's upside move in gold was directly attributable to dollar weakness. Which brings us to the central theme of today's show, and that is, while the dollar will oscillate from one day to the other, as we can see yesterday we had a large spike to the upside, today a large move down, it has maintained a price point above the 50, 100, and 200-day moving averages, which basically signals that it is and has been in a defined long-term uptrend. However, when we look at a weekly or a bi-monthly chart, in other words, each candlestick represents 2 weeks, we can see a different potential in the market, and I'm addressing this particular top here that comes in right around 104 or 105 on the dollar index. Because when we do look at a long-term chart, this is a 2-week candlestick chart, we can see that on 3 occasions we have hit an apex between 103 and 105. The first one here, this occurs in 2017. Another one right here that occurs in 2020. And this most recent one that began to occur approximately 2 weeks ago, in which the dollar hit this apex, and on the last 2 occasions had sold off in a multi-year or a year correction. This first one took approximately 1 year, the entire year of 2017, to drop 16%. This second one took approximately a year, and it also dropped, in this case, approximately 15%. It seems as though the rallies take a lot longer to work themselves through. But the reason I bring this up is that although past performance does not in any way guarantee future performance, it is interesting that the dollar tends to trend for an extended period of time, both rallies as well as corrections, and the fact that we have hit this apex now for the 3rd time and declined from that price point suggests that there is at least a reasonable probability that we could see a major decline in the dollar over this next year. And if that assumption is correct, it would be highly supportive of gold pricing. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.